It is general knowledge in the technology world that venture investors have a plethora of chances to succeed, and that the race has already begun. Bitcoin and NFTs have made headlines recently, but distributed ledgers are nothing new. However, after being integrated with peer-to-peer functions and consensus algorithms to create a blockchain system for usage on the internet, they have recently gained attention. Bitcoin, NFTs, and other parts of blockchain technology have sparked a debate. Whatever you think of it, blockchain appears to be heading down the right path for its intended purpose, but of course, it isn't as perfect as it may appear. But first, hello and welcome back to the channel. This is CryptoNow, and we're back with another incredible video. So please subscribe to the channel and enable alerts to be notified of each new upload. In this video, we will talk about cryptocurrency and the controversies that surround them, as well as opportunities that are the talk of the net right now. There is a lot to unpack here, so sit tight, listen up, and enjoy the video. Decentralizing Applications. So, we know that blockchain technology may be used to create a monetary system, but it can also be used to create smart contracts, which are contracts written in computer code and executed automatically based on certain criteria or terms. Vitalik Buterin launched the first version of Ethereum back in July 2015. It's a decentralized, open-source blockchain that supports smart contracts. Anyone may use Ethereum to create permanent and irreversible decentralized applications. Ethereum also has a built-in currency known as Ether. Unlike Bitcoin, Ether can be issued in limitless quantities. Non-fungible tokens, or NFTs, are the data units maintained on a blockchain that has recently gained popularity. An NFT can be linked to a physical or digital asset and includes a license to use it for a specific purpose. NFTs are similar to cryptographic tokens in that they are not interchangeable or fungible. It ensures legitimacy, but it does not automatically bestow copyright unless the contract connected with the token clearly states so. Cryptocurrency is a growing movement. The influence of cryptocurrency is expanding. With an estimated 100 million participants around the world, the total market value of all cryptocurrencies hit about $3 trillion. There are over 300 cryptocurrency trading platforms, at least 12 NFT trading marketplaces, and approximately 30 Bitcoin futures markets. Thousands of decentralized autonomous organizations, or DAOs, with an estimated 1 million members are also available. The terms of a smart contract linked to a blockchain are often governed by a DAO. Collectibles, artwork, event tickets, gaming, virtual items, real-world assets, identities, memes, and domain names are now among the NFT categories. Christie's, one of the most prestigious art auction houses, sold an NFT by artist Beeple for $69 million earlier this year, making it the third highest sale by a living artist after Jeff Koons and David Hockney. In a $700 million 20-year naming rights deal, the Staples Center in Los Angeles will be renamed Crypto.com Arena. Cryptocurrency and building blocks. With all of these advancements and information, we believe we have three fundamental building elements for the next generation of the internet. One that is centered on the exchange of value, repositories of value, proof of authenticity, and smart contracts rather than technological interconnection. These will be global, networked, constantly on, and borderless. It will be a value-added internet. What else do we require in order to conduct business? We now have currency, digital tokens, and smart software contracts, all running on a blockchain, thanks to these new capabilities. We've seen, read, and heard how a lot of people are concerned about this. Why? Simply put, it appears that everyone is involved, but no one is in command. For example, as of April of last year, there were an estimated 9,000 cryptocurrencies in circulation, with 20 currencies controlling about 90% of the market. It's a situation that many would be anxious about and should be looked out for. Open market innovation. You may believe that the crypto movement is chaotic and, at best, perplexing. We would argue that this is the best example of open market innovation. A venture capitalist, such as myself, sees this as an opportunity. It's also a perilous and dangerous position to be in. As market dynamics fluctuate, you can be a genius one day and bankrupt the next. These creative innovative opportunities are frequently referred to as the primordial soup. That was the internet in the 1990s. In the early 1980s, the PC was similar. This means that there may be no consistent standing in the crypto movement, so one can never be too sure. Bitcoin, not yet a currency, not a safe haven, but a bet on technology. We see Bitcoin investment as a very dicey wager on emerging technology with little current utility, a huge potential regulatory overhang, and shaky liquidity and transparency, but which may find considerably better use in a variety of new fintech applications as its network expands. Bitcoin, like the TCP or IP standard that underpins the World Wide Web, is subject to massive network effects, meaning that the more people who use it, the more valuable it becomes. Other technology platforms have shown how network effects lead to winner-take-all economics, and Bitcoin appears to be one of these. Rather than delving into a philosophical debate over cryptocurrency's ultimate role in the financial and monetary systems, we feel that interested investors should first evaluate what Bitcoin does and how it does it, and then consider how it might fit into a portfolio. The scarcity of Bitcoin is one of the last technical details that must be considered. The rate at which new Bitcoins are created is halved every 4 years, and the supply will be totally depleted at 21 million coins. There are currently over 18.5 million Bitcoins in circulation, with the final Bitcoin eventually being created in 2140. The significance of this date is frequently overstated, and it can be deceiving. It is crucial to acknowledge the slowed down rate of growth and the decline of the current subsidy of 6.25 Bitcoins per block to around 0.2 Bitcoins in 2 decades. Both the eventual amount of Bitcoin and the rate at which it is mined are arbitrarily limited, unlike sovereign currency or even gold. Other crypto assets, on the other hand, have risen to meet demand by essentially increasing supply. Hello friend, we've made it halfway through our list and we sincerely hope you've enjoyed it thus far. If you have, please give us a thumbs up and turn on notifications to be notified of new uploads. What do you think of these controversies so far? Let us know your opinion in the comments below. Let's move forward with the video. Investment exposure. Central governments have generally taken a wait-and-see approach regarding Bitcoin. Regulators are frequently identified as a threat to crypto assets' existence. But this too might be viewed as a beneficial step forward in their development. Increasing the openness of the market systems that drive supply and demand, while reducing fraud and piracy, would likely lead to larger institutional adoption. Bitcoin investing appears to be moving out of its Wild West phase, with companies like PayPal and Fidelity joining the fray, as well as the insurance company MassMutual. Traditionally, non-Fidelity brokerage accounts have gained Bitcoin exposure through public investment trusts like GBTC and different private fund formats, while a number of exchange-traded funds or ETFs are now awaiting approval. Alternatively, a variety of public companies such as GPU manufacturers, blockchain companies, payment platforms, and exchanges provide varying levels of indirect exposure. There are as many ways to invest in Bitcoin as there are different points of view among the commentators. For the foreseeable future, we expect Bitcoin to behave like a somewhat incohesive, highly volatile financial asset. Any holdings should be sized appropriately given the substantial risk. Rather than relying on the rumor mill, we encourage would-be buyers to undertake their own investigations to better comprehend the facts. Government regulation is inevitable. Investors and speculators are keeping a close eye on worldwide events as governments respond to cryptocurrencies in a variety of ways, ranging from hostile to apathetic. Christine Lagarde, the head of the International Monetary Fund, recently indicated that international regulatory action on cryptocurrencies is inevitable. We are actively engaging in anti-money laundering and countering the financing of terrorism, and that reinforces our determination to work in those 2 directions, she added. In late January, world leaders gathered in Davos for the World Economic Forum, with several sharing the same sentiment, according to a CoinDesk report. Leaders who attended include French President Emmanuel Macron, UK Prime Minister Theresa May, and the Secretary of the US Treasury Department, Steven Mnuchin. There is so much going on in the world of cryptocurrency. The race is truly on. It will be an exciting adventure, but no matter how things turn out, it will undoubtedly alter our world in profound ways. Do you think that these controversies and opportunities will make or break the crypto movement? That concludes today's video. Please subscribe to the channel and enable alerts to be notified of new uploads. This is CryptoNow, and we'll see you in our next video.